Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com for Thursday, February 7th, 2008. Well, again we had an interesting day for the pure reasons that the market was extremely volatile. In a bear market, as I've said on multiple occasions, every move up is usually a failed move. And what I mean by that is that it doesn't matter whether it's a stock or a market, it doesn't matter. Anytime you have a push up in a market, in a bear market, even if it looks like it's a breakout on a technical level, it often fails. Now, it doesn't always fail, but it tends to do that. And I want to show you today on the intraday charts how in many instances today we saw that initial move up, an initial powerful move up at that, and multiple times we saw moves back down. So let's get right into the intraday here on the ES. And again, this is the ES Future March 08 contract on the E-minis. And what you can see here is a volatile day. Volume was decent today. We did over 2 million contracts, so that's pretty good. But what I want to show you today is just the volatility involved in this market and how treacherous it is to trade it. Initially, what we saw here around 8:30 and right here around these lows was we saw some store sales, some retail sales come out. And initially the market got spooked because Walmart actually reported less sales or less percentage of sales than they had anticipated. They had anticipated a growth in sales of 2% and they came in at about 0%. So the market initially took that as bad news, but the key here was that Walmart really was the only player to report like that. All the other retailers out there reported decent sales compared to what expectations were. And again, I say decent sales in relation to expectations. That's the key word there, folks, because it's not like these guys are blowing away sales by any stretch, but expectations have come down so much that now they're beating these expectations except for Walmart. So what we saw after that was a nice move up, pre-market here, up till about 9 o'clock, then another drop, and then once the market opened, we saw a massive push in the markets. And we took the market all the way above that 200, wiping out that 200. But again, we had to see a confirmation move here, and we never got a close above that previous candle, and we started to sell again. We sold right back to that 20 moving average, at which point we started to rally again. And the move went stronger this time, with a small pullback here, as you can see, which was just a 1-2 pullback right to that 200 moving average here, which is the green line, and then up we went again. Now this is the key right here, because every day I point these out to you guys, and you can see right here as I take away that line, you have that topping tail in place. And at this point, by the way, folks, the market was up. The NASDAQ was up over 40 points, or about 40 points. And all of a sudden, within half an hour to 45 minutes, we reversed that whole move off that topping tail and took us all the way down to the point where the NASDAQ was negative 11 points. So you're talking about a 50-point reversal in about an hour, if not a little less than an hour there. And that was the key right there. And then right into the close, you got a technical bounce back up, a little pause, and another push into the close. So the volatility in this market today was unbelievable. Every move up was met with selling and a drastic move down, and vice versa. Every move down had some buying come into it and pushed us back up. Now, you can ask yourselves, well, is this a good thing or a bad thing? And the real answer to that is that ultimately we closed positive today. The NASDAQ was up 14 points, the Dow up 46, and the S&P was up about 10. So you have to look at it for the small victories here. You can't look at it as, well, we didn't close at the high of the day, we didn't do this, we didn't do that. You got to look at the cup as half full at this point and take what you can get. And a positive close here on the indexes is a positive sign in the near term. It may actually indicate that we're nearing a point where we may actually see some up move in this market. It's a little too early to say that, especially considering it is a bear market and every rally should be sold. The only key here is that we could be seeing a couple days of a push up instead of just a morning or afternoon or day push up. So let's take a look at some of these other charts here. I want to go into the SPY daily and take a look at this. So let's go to the SPY here, and here's the daily SPY. Now, you guys can see the massive sell-off we had at the beginning of the year, and again, this is the daily chart of the spiders, and you can see that massive push up we had, and then the retrace, and the key is here, is if you guys can see this line here, where did we come down to? To me, that looks like almost about a 50% retracement of the move up. And again, you want to focus in on these points because they're key Fibonacci points, 0.618 retracement, 0.5 retracement, and you can look at those points as being key in the market on a technical level for when a bounce will come in. And what I love about yesterday was that when we did the video yesterday, Cisco had just or the CEO of Cisco had just said something on the conference call that had caused the futures to drop drastically. And the beauty of this is that when the sky looks to be falling is when the sun emerges. Okay? And that's the best way to look at it. So what you had yesterday into the close, and again, we can show you here on, you can see it on the gap down on the NASDAQ. We'll bring up the NASDAQ here. And obviously the NASDAQ, Cisco reversed today from yesterday's losses. But you can see we gapped down. We opened all the way down here in the markets at the bottom of that green area right here. And we were able to push up throughout the day. Now, we didn't close at the highs, as I mentioned. But just the fact that Cisco was able to recover after the CEO's negative comments on the outlook is a significant sign in itself. And we have to take, again, what we can get in this market to show us whether or not this market is moving up. Now, again, we talked about that retracement. You're nearing, especially on the NASDAQ, it looks like a 0.618 approximate retracement, give or take here. So we have retraced a good portion of how low we were down here from this point. And that is another sign that could signal that we are nearing a possible bounce. And again, I'm going out on a limb here, folks, and it's not to the point yet where I'm taking large, long positions. No way. And I want to stress that. I'm not doing that. I am not. Because it still is a bear market out there. The indexes are down over 20% from their highs, and you have to be very cautious. But I am seeing some small signs today, and I did kind of like the idea that the markets did close to the positive side today, and that could give us a small move up tomorrow, at least in the morning. Now again, I have to stress this, any positions, and this is the way it's been in the chat room, and I've stressed this in the chat room, you get up a little bit in a position, you take profits. That's the only way to do it, because there are way too many positions out there that you get a nice gain out of it, and if you don't take it that instant, you lose the gains and you go negative. And obviously, as a trader, you always take profits. Take profits, take profits, take profits. Worry about the amount of profits once we're back in a bull market, and then you can start being picky about how much you're making. But in this market, you cannot be, and you got to play on the safe side. Safety first, and then profits and massive amounts of profits can come later. All right. So again, we're going to take a look at the Qs. I want to point out the Qs here on the daily, and again, you can see that you almost got a little double bottom area right here, and I'm going to point that out. Notice here on the Qs, you had the open right here where the candle began. We dipped lower, but we never were at this area below this point. And where did we open today? We opened right down on that same level. We did push up off of it, so now what we want to see tomorrow, and this is going to be the key, is do we see follow through to the upside? And I won't really go out on a limb yet and say that I'm favoring a strong bias to the upside in the near term, but if we get another update tomorrow, that is a possibility where we could move back to this 20 moving average. But I want to stress this again, folks, and I feel that, kind of in this situation, it's very important to stress because of the type of market. When I say, maybe favoring an upside, you're talking about maybe a 60-40. It's a very tough situation here because of all the negativity out there, because of all the issues in this market. The credit bubble's not going away. I don't care what the government does with this stimulus plan. It's not going to cure anything. It's just a Band-Aid on a festering infected wound, and this credit bubble is not going anywhere. The Fed has shot all their bullets out of their gun. I foresee another 50 basis point cut at their next meeting, if not before. So long story short, even if we do see a push up, it's going to be a muted push. You may see a week worth of bounces out of it, maybe a couple days and a pullback and a couple more days. Ultimately, you take profits again and you keep playing the same game. When the market gets crushed and everyone's bearish, that's the signal to buy. When everyone feels euphoric and maybe says this market is going to be okay, that's when you take profits and just continue to play that side each way. Buy low, sell high. I know it sounds easy when I say it like that, and trust me, I know it's not. That's what we handle in the chat room, making sure that we stay safe, that we take profits when they're there, and we continue to build on a market and learning experiences. Okay, on a side note here, we want to just touch on a couple different things. I want to touch on Baidu today. Baidu got a nice little bounce after breaking that 200 moving average. Now this is going to be interesting here because if the Baidu didn't confirm the move down, but it didn't exactly confirm the move up by getting back above that 200. We need to see Baidu get above that 200. Now, Research in Motion. Research in Motion closed below the 200 sold off a little bit today by gapping down, but then rallied to close positive. However, so it didn't confirm the move down in my opinion, but however, we did close right below that 200 again, so we have to continue to monitor that. If we can close back above this 200, you could easily see a move on Research in Motion to this level at the 20 moving average. Alright, now also, Apple Computer, ugly chart, no doubt about it, but it is getting a little oversold here. And I'm not ready to step up yet, as I think ultimately Apple's going to go to $100, believe it or not. But there's going to be bounces along the way, and I want to stress that again. Every bear market has bounces. Ultimately, in a bear market, you're headed lower, but you have bounces along the way, and that's what we're talking about here, folks. Take small gains, grab them when you can, and run for the hills. That's all you can do. That's all I do. And just look for the quick scalps, the quick swing trade overnight, where you take money the next morning early and run, because more likely than not, they're going to sell this market at some point again and sell it hard. Enjoy. We'll talk to you tomorrow. Keep in touch, and we'll see you all soon. Take care.